Welcome back, everybody. Today we're going to be going through the trades that we took this morning in the New York AM session. It is Tuesday, February 17th. We took two trades this morning. One of them was a break-even trade, and the other one hit full TP. And both trades were using the continuation model. The continuation model is fucking OP. That's the only model that you're going to need in your fucking life. So if there's one model that I had to use for the rest of my life, it would be the continuation model, and I'm going to show you how to use it today. So, let's go over what happened this morning in the New York AM trading session. So, first of all, for the draws on liquidity, let's go through that. I'm on the hourly time frame here. So we have this Asia high here. So let's mark that out so we could possibly come and take that out. And then we also have this previous week London low here. So I marked that out previously. So it looks like those two are going to be going our draws for this morning. If the market looks like it wants to continue higher, then we're going to look for this Asia high and potentially this London high. And if the market wants to go lower, we're going to look for this London low and then possibly this Asia low. We'll see if we have enough volatility in the session to do that. And then obviously we have the London high and then we have the London low of the London session. So let's mark this one out as well. There we go. All right, so let's play some candles. Let's see what happens. So immediately we take out London high. So now I'm thinking we probably want to draw higher towards the Asian session high, but as you can see, the market just doesn't do it. It doesn't do it, and it V-shapes. It V-shapes out of it. So now I was gonna look for continuation higher, maybe like a nice little scalp, like 10 minutes into market open, but after this V shape here, guys, hell no. Fuck that. So we're not even going to be looking for that shit anymore. That's fucked up. We took the liquidity. We V-shaped out. We want to continue lower. I'm going to be interested in shorts here. So the market comes down. We don't get any scalping opportunities to get into a short here. Um, so the market just comes down and it takes out this London low here. Um, and it would also come down to take the previous second London low. So now I'm gonna be looking for a continuation back down to this swing low here. So let's go through the time frames here. Let's see if we could find any fair value gaps that we can come out of. And immediately here on this leg down, I see that we have this 5-minute fair value gap here, bearish fair value gap. So let's mark that out. So we can potentially use that to continue out of and then look lower for this swing low down here. Now, if we do want to inverse this 5-minute gap, then I would be interested in taking a long continuation long somewhere out of this 5-minute gap if we disrespect it. Okay, because we did just take out this section's London low and then the previous week section's London low there. So if we respect this gap, then we'll continue lower. But if we decide to flip it, then we're going to be looking for longs, obviously, back up somewhere to possibly an unfilled fair value gap there. But let's see. Like for now, we want to be looking for continuation shorts here. That is the goal. So at this point, we're in the 5-minute gap. We're going to be looking for any like 1 to 3 minute time frame bullish for value gaps on this small leg up that we can look to inverse and then look for continuation lower here. So let's see if we could find any. None of them have printed yet, so let's just see a couple more candles. Did one print? Yes, one printed. So let's just go back for a second. So we have a small but valid 2-minute gap right here. So that's a 2-minute gap there. No 3 and there's no 5. So let's just head back. There's no 1s either. So this is a nice 2-minute gap here. And this is where I become interested in the trade. So I see this 2-minute gap fill, and I'm thinking in my head, okay, let's inverse this. Let's enter shorts, and let's look for drawing towards this swing low here, right? And then we see this right here. And I'm thinking, yeah, let's fucking get in this piece of shit. Let's get in this bitch. So soon as this candle closes, we are looking to get in this trade here. So it's a 1.7 to 1 trade. We came up where we look like we're respecting this 5 minute bullish for value, bearish for value gap, and we want it market to draw lower. So let's see what happens. We're in the trade now off that candle closure here. And if I'm correct, yes. So right here off of this candle, we go break even. Okay, this is enough of uh, push lower that we can safely go break even. There's also that order block there. But this is enough of a push lower that we can make it a risk-free position. But the mistake was we did not take profit on that trade, and the market just came back up and tagged our break even at that point. So we were stopped out break even. We didn't make any money on that trade. As soon as that candle closed, I should have been out 50% of the position, but I thought that the draw was so strong that it was for sure just gonna absolutely wreck the TP. Like it inversed the gap with speed. It pushed lower, and I thought for sure it would take just one more candle to take it out. That's why I didn't take partials, but in hindsight, I probably should have. But it's all good. It was a risk-free trade. We're out of that trade now, break-free. So we're still looking for lower. And actually, let me close all this here. So you guys remember this 5 minute here, right? In the meantime, when we were in that trade looking for the setup, we created 1, 2, 3, 4, 5. Here it is. We created a 15-minute bearish fair value gap. Right there. Right there. Bang. Look at that. I'm once again getting interested in a trade. I'm looking for another continuation short. This draw it looks too good to be true. And this 15-minute, it makes for perfect continuation shorts. At this point, I'm not even looking anymore at longs. There's just the next draw on longs is a little off. It's a little high, so I'm looking for continuation shorts at this point. So let's see. Let's expect this 15-minute gap, and let's look for an inverse down lower. Okay, this looks like a good opportunity. So let's look for a 1 to 5 minute time frame for value gap. So nothing on the 5. Ooh, look at that. We got a 3-minute gap right here. This is nice right here. 3-minute gap. All right, back on the 1 minute time frame. So we have the 3-minute gap. We're looking for the market to inverse this, and then we're looking to enter, and then we're going to look for continuation shorts back down here. So let's see what happens here. There we go. So we inverse, and at this point, most of the time, I would wait for a retest of this 3-minute for value gap. I would wait for another one, but at this point, this candle here, it looks like we want the next candle just gonna absolutely blow all the way down. And it's so strong too. Like we came out of this 15-minute fair value gap, we inverse a 3-minute. Everything here is lining up, and everything was telling me just fucking just enter, you piece of shit. Okay, so we're looking for the same draw as last trade, pretty much exactly the same. The first trade we were continuing out of a 5-minute for value gap. Now we're coming out of a 15-minute for value gap. So literally two continuation shorts. This is a 1.5, so a little bit less of a ratio than the first trade. But let's see how this trade works out here. Bang. Look at that shit. Out. As soon as we got to this point here, I was break even already. But as soon as I put it to break even, the trade hit full TP. So an absolutely beautiful continuation short. A nice 15-minute bearish for value gap. A nice inverse of a 3-minute. Just absolutely textbook continuation. Textbook. The first trade was textbook as well, right? It was just coming out of a 5-minute, so less powerful of a confluence than a 15-minute gap. But both trades, I mean, if you took a similar trade, then yeah, you're definitely trading the continuation model and you're trading it right. Anyone that trades the continuation model probably won today because these shorts were so obvious. And if you missed it, you got to hop on the continuation model. The continuation model is strong as fuck.